The South, with its profound historical imprints of slavery, segregation, persistently high poverty rates, and enduring periods of limited educational and economic opportunities, has undeniably acquired a rather bad reputation. The comprehensive definition of the South, as articulated by the United States government, encompasses a vast geographical expanse, including Texas, Oklahoma, Louisiana, Arkansas, Mississippi, Alabama, Florida, Georgia, South Carolina, North Carolina, Tennessee, Kentucky, Virginia, West Virginia, the District of Columbia, Maryland, and Delaware. This demarcation is intricately linked to the Mason-Dixon line, established since the 1760s, and has dynamically evolved over time, with the addition of more states during the westward expansion of the country. The Mason-Dixon line, initially conceived as a geographical boundary, transcended its mere cartographic significance to become a symbol ingrained in the collective American consciousness. Its notoriety heightened as it delineated the division between the states that embraced the institution of slavery and those that championed freedom, reaching a critical point right before the onset of the Civil War. Speaking of slavery, the South's reputation for economic hardship and limited opportunities is deeply intertwined with its historic legacy of slavery. The South's dependence on slave labor for cotton production hindered economic diversification. While a small plantation elite prospered, the vast majority of the population, both enslaved and free black people, were trapped in a system that denied them opportunities for education, land ownership, and wealth accumulation. Investment prioritized the needs of the plantation system, neglecting infrastructure crucial for broader economic growth, like transportation networks and public education systems. Federal efforts to rebuild the South after the Civil War were short-lived and underfunded. This left the region with devastated infrastructure, limited resources, and a large formerly enslaved population with few options for economic mobility. Sharecropping emerged as a replacement for slavery, but it trapped many black families in a cycle of debt and poverty. Tenants received a share of the crops they produced in exchange for land use, but remained dependent on white landowners for supplies and faced unfair pricing structures. While the former abolition of slavery marked a turning point, Jim Crow laws and segregation perpetuated racial and economic inequalities that continue to cast a long shadow over the South's economic landscape. In 1870, the illiteracy rate for black adults in the South was a staggering 95%, compared to 20% for whites. Segregated schools with fewer resources for black students hampered their ability to acquire skills necessary for economic mobility. Segregated markets and discriminatory lending practices stifled black entrepreneurship. In 1900, less than 2% of businesses in the South were black-owned. This lack of black business ownership limited economic opportunities within black communities. Black workers were relegated to low-paying manual labor jobs with limited opportunities for advancement. In 1890, over 70% of black workers were in agriculture, compared to less than 30% of white workers. This segregation persists to some extent today, limiting black participation in higher-paying sectors. Talented black professionals often faced limited opportunities in the South and migrated north for better prospects. This brain drain hampered the development of a skilled black workforce in the South, transitioning away from its historical legacy of slavery. Another significant contributor to the South's bad reputation is food insecurity. The southern states consistently register some of the highest levels of food insecurity across the nation. Food insecurity, fundamentally, denotes the struggle to access enough food, coupled with the uncertainty of where the next meal will come from. Contrary to concerns of overconsumption, the South faces a challenge rooted in insufficient food intake. Compounding this issue, individuals experiencing food insecurity often resort to affordable, yet unhealthy meal options, predominantly fast food. This pervasive problem affects millions of Americans daily. The South, despite its unique cultural and economic dynamics, remains susceptible to this nationwide trend. In the years spanning from 2020 to 2022, states like Texas, Arkansas, Oklahoma, Louisiana, and Mississippi consistently reported food insecurity rates surpassing the national average of 11.2%. Mississippi in particular faced the most severe situation, with a staggering rate of around 22%. Unfortunately, other southern states trailed closely behind. The consequences of insufficient food intake or reliance on fast food extend beyond immediate hunger, significantly elevating the risk of health problems and complications for individuals in these circumstances. Obesity, diabetes, and chronic illnesses often stem from or are aggravated by unhealthy lifestyles and poor nutrition. These factors not only have adverse effects on individual health, but also contribute to long-term outcomes that are far from positive. In the southern regions, where a significant portion of the population grapples with food insecurity, the repercussions extend beyond personal well-being, permeating the very fabric of the states themselves. The consequences of inadequate nutrition not only result in dire health outcomes for individuals, but also strain the systems that constitute the states. The healthcare system in particular bears the brunt as it grapples with the complexities and complications arising from food insecurity-related health issues. The financial and resource allocation required to address these health complications diverts attention and capacity from other crucial aspects of healthcare. The overarching impact is a compromised healthcare system that struggles to cover all bases effectively. Access to plentiful and nutritious food is foundational to human success and has a ripple effect that permeates every level of society. When this fundamental aspect becomes compromised, it poses a challenge. Rising levels of food insecurity demand a comprehensive solution rooted in improved economic conditions for residents. More financial resources empower individuals to access better quality food, thereby reducing the incidence of health issues. This positive shift not only translates to fewer medical bills, but also infuses more capital back into the economy. However, the South finds itself significantly lagging behind the rest of the country in addressing this critical issue of food insecurity. In 2021, the median household income in the southern region was $62,772, indicating a shortfall compared to the national average of $67,521, amounting to a gap of approximately $4,749. Conversely, numerous northern states exhibited notably higher median household incomes during the same period. For instance, Massachusetts, $88,257, Connecticut, $82,564, and New Jersey, $82,319, all surpassed the national average by a substantial margin. Moreover, the South consistently contends with elevated poverty rates compared to the national average. In 2021, the poverty rate in the South stood at 14.1%, exceeding the national average of 11.4%. States in the southern region, such as Mississippi, 19.5%, Louisiana, 18.8%, and Arkansas, 17.8%, reported some of the highest poverty rates in the nation. In contrast, northern states like New Hampshire, 7.3%, Massachusetts, 7.7%, and Connecticut, 7.9%, exhibited poverty rates significantly lower than the national average. While the national unemployment hovered around 4% as of February 2023, certain southern states continued to grapple with higher rates. For instance, in February 2023, Mississippi, 5.4%, and West Virginia, 4.9%, reported unemployment rates exceeding the national average. Furthermore, the types of jobs available display a notable contrast. Southern states tend to have a higher concentration of jobs in lower-paying service industries such as hospitality and tourism. In contrast, northern states often boast a larger share of jobs in higher-paying sectors, including manufacturing, technology, and finance. Furthermore, the South grapples with a less-than-stellar reputation in the realm of education. As per the National Center for Education Statistics, the graduation rate for public schools in the South stood at 86.2% in 2020, trailing behind the national average of 88.2%. This pronounced educational gap poses a formidable challenge by placing constraints on opportunities for securing higher-paying jobs, perpetuating a cycle of economic disparities. A parallel narrative emerges when examining enrollment rates in four-year colleges. In the year 2020, the Southern enrollment rate in undergraduate programs recorded a modest 52.4% compared to the national average of 58.2%. The association of the South with robust college education or high literacy rates has, regrettably, been a long-standing perception that has weathered the test of time. This reputational drawback gains credence when examining literacy rates. Southern states feature prominently, accounting for 6 out of the 10 states in the country with the lowest literacy rates. This disconcerting statistic is further compounded by the fact that 6 of the bottom 10 states for high school graduation rates also hail from the South. It becomes evident that the state of education in the South faces considerable challenges. Despite the presence of prestigious universities in the South, a significant portion of the student body comes from other regions of the country, or even different countries altogether. The historical legacies of slavery, segregation, and limited education and economic opportunities have contributed to the South's reputation for poverty, limited mobility, and racial inequality. While significant progress has been made in recent decades, the long shadow of the past continues to shape the economic landscape of the South. If you have an alternative view of the South's reputation, share your thoughts with us in the comments below. Also, check out our previous videos for more insights into the economic and geopolitical landscape of the United States of America. Don't forget to subscribe and turn on the notification bell so that you'll be the first to be informed when we upload a new video. Thanks for watching!